Good afternoon, ladies and gentlemen, and it is 3:45, so we hope, we're very glad that you're here, so I'm going to thank you for that, but we are going to make this a very energetic and upbeat conversation. I'm going to pass, I'm actually going to let my colleagues introduce themselves, but what we hope, this particular panel we'll be talking about a number of the what we're seeing as a very exciting opportunity in solar. And we'll cover not just, how the quickest route to universal access across the continent, whether it's, so home grids or whether it's off-grid or whether it's mini-grids, what are the risk mitigations in the industry, how we basically see that rolling out for industry as a whole. So I'm hoping it's going to be quite promising. We'll be basically discussing most of the challenges that we're seeing across the space. But without further ado, I'm going to let my colleagues very quickly introduce themselves across the board. Eugene, over to you.
Sure. Hi, I'm Eugene Musin. I'm with Citi in our team called Social Finance, which is an intentional strategy of the bank to deploy assets to emerging markets that have a social impact.
Hi, I'm Wairimo Karanja. I'm with Persistent. We are a climate venture investor and venture builder in sub-Saharan Africa. We invest in early-stage companies that are building sustainable and scalable climate solutions on the continent.
Hello everyone, this is Piyush Mathur. I am the co-founder and Chief Business Officer of Odyssey Energy Solutions. Odyssey Energy Solutions is a technology and financing platform specifically for the distributed solar sector, what we're going to talk about here. We have cumulatively deployed $2.5 billion of capital into this sector across different asset classes like mini-grids, solar home systems, C&I rooftops, and all forms of solar. I look forward to telling you more about it.
Thanks, Piyush. My name is Fabio Eucalipto. I'm a co-founder and director of Kenny Solar. Kenny Solar is a company that provides solar and battery energy storage solutions to the commercial and industrial space. So B2B, that's what Kenny stands for, by the way, C&I, commercial and industrial solar. And yeah, we are present in South Africa and India, 120 employees and about 120 megawatt at the moment operating in those two markets.
Afternoon, my name is Kevin Tiruvangadam. I'm Group CEO of JCG. JCG, just to do a 1-minute intro, is Kenyan capital. Our founder is Kenyan, so our money comes from Africa, and we redeploy our capital in Africa. We're present in 8 countries, from South Sudan, East Africa, all the way down to DRC, Zambia, Mozambique. And we are involved in multiple sectors, including petroleum, oil and gas, energy, which is on the back of fossil fuel, but also solar, and then also in real estate and hospitality.
Thank you, colleagues. And so I want to start off, actually I should mention that even though I am a partner at Leapfrog on the investment side, I'm sitting here as a director. I serve on the board of Sun King, and Sun King designs, manufactures and distributes solar home systems, so it's the off-grid solution across Africa and Asia. So I want to start off with the first question, which is the whole idea of how we achieve universal access as soon as possible. As we speak today, we've got 768 million people across Africa who either are off the grid or they're underserved or misserved by the grid. And ultimately, what we're seeing, I mean, the panel before mentioned it towards the end, is that for the segment in Africa, which generally it's an energy poverty issue, and so what we're seeing there is that if we don't cover the access, the universal access for the for low income in particular, there are environmental, health issues, as well as just kind of condemning to poverty in the sense that if you don't have electricity, or if there is, or indeed the ability to refrigerate food. And what we're seeing is that the off-grid, and then there's a question of what we do in terms of industrial, replacing industrial across the board. So on that question of whether we do it via a grid or whether it's a solar home system, I'm going to ask you the first question, why Remu? Because you, as a venture capital investor, you see across the board on all the technologies. Could you tell us just what, or tell the audience in terms of how are we going to get to universal access as soon as possible?
Right, so grid solutions, very important. We do need a lot of people to be connected to the grid. But when you look at grid systems across Africa, they follow the railway line or they follow large town road connections. And so you've got this large artery and little capillaries, but you don't actually get to the hinterland of countries, to the hardest to reach. So off-grid solutions are also very important in order to get us to not just relieving energy poverty, but also, as you know, climate impact is also social impact, right? Businesses need to be powered. Homes need to be powered so that children can be able to study at night, and therefore we have a workforce that grows and can be able to contribute to the industries. And those over 700 million that need, that still don't have access to electricity, most of those are actually off-grid. So off-grid solutions like solar home solutions, rooftop solar, commercial and industrial solar are really important, not just for homes, but also for businesses. And that's also where we play in as Persistent. There are also other adjacent technologies that we're seeing also related to off-grid solutions, like solar-powered electric mobility, where people can go to swap stations in peri-urban areas or rural areas and therefore have their electric bike. And we've seen that capability also in power savings. The same for energy in productive use in agriculture, solar mills, solar water pumping. That's what's going to take us to the next, in my view, agricultural revolution when it comes to the African continent. I don't want to take up a lot of time.
No, thank you. That's really helpful, because I think we were talking in terms of access to light, but actually what we're seeing is when you think about the agriculture and its contribution to Africa GDP, you're actually starting to see some of those more productive uses as we go ahead. So just to kind of continue on that question of grid versus solar home systems, I could pass on to you, Fabio. You at Candy Solar Industrial in India and in South Africa. Why did you start with South Africa?
So, we had to start somewhere, right? Our purpose is to powering a more sustainable planet. So ideally, we would like to snap with our fingers and power the entire planet. But obviously, we have limited capital available. And so we had to decide, where do we deploy? If we deployed at $1, where do we have to, in displace 1 kilowatt hour with a clean kilowatt hour, where is it going to have the highest impact? And South Africa and India share one world record, not a great one, but they have the highest grid emission factors in the world. Number 1, South Africa. Number 2, India. So for us, it was evident, like if we can displace a kilowatt hour in India and South Africa, it's going to have the highest impact from a CO2 emission saving perspective. And that's why we started with those 2 countries. Still there, because they're huge. So it takes a while to really scale up there. But yeah, that's the reason, actually.
And so actually in preparation for this panel, I was looking at emissions and when you look at energy use per capita for South Africa, it's actually, it's almost half of what it is, for example, in the UK. But when you then look at emissions, it's actually higher than UK but lower than Germany. And that presumably also is why you get this situation where if you're going to invest $1 on decarbonisation, if you do it in a coal country, you're going to basically achieve more in terms of emissions. However, I mean, and this question is going to lead on to more. When we also, often we hear the question, we hear that that coal is cheaper. So could you run us through just the price that your customers pay, and all, as well as the returns on for solar industrial?
Yeah, so I mean, the price our customers pay, again, these are commercial and industrial businesses, all sizes, by the way, from very small to companies that have the power consumption of a small village in Switzerland, so 20 megawatt, 50 megawatt, they pay the price from the grid, right? The kilowatt hour that the utility charges them, and obviously that kilowatt hour includes a little bit more than only the production of coal or whatever the power source is, but the entire grid infrastructure as well, right? And typically those prices are highly subsidized. Nevertheless, our customers typically save between 20 and 50% on the kilowatt hour price if they go solar with us. So essentially, we provide them with a solution which brings guaranteed savings from day one, and they pay us basically with the savings. So see, like it's almost a no-brainer for our customers, because they're saving money from day one, and we finance the system. So it's more a question of who's going to provide the highest savings. That's what we compete with other competitors. Who can provide the highest savings?
And maybe if I could just come in on that. I mean, we're not necessarily at Citi a solar energy specific financier. For us, at least in our social finance group, it's anything from agri, financial inclusion, expanding access to basic services. But what we're finding, particularly in sub-Saharan Africa, solar is a place where you could really deploy capital because the unit economics make sense. And we don't necessarily do rooftop. We've been actually focusing on solar home systems at a small level. But either way, at least what I've been seeing across the value chain, the unit economics are so compelling that that's a good place to put money if you're for whatever spectrum of capital you have.
And on that note, just because when we on the unit economics, we know that the price of photovoltaics has fallen substantially, and that's actually enabled access. It's certainly been one of the key reasons why Sun King has been able to drive higher penetration across solar home systems. However, there's still the issue of battery storage, which, while it's fallen substantially, is not quite where it needs to be. Wairima, quick come back to you before I'm going to come on to risk mitigation later, but quick come back to you. What are the challenges and what are you seeing? And I'd like to also address the issue of end of life for solar home systems as well.
All right, so when it comes to battery storage, yes, the prices have gone down, but again, when it comes to, say, commercial and industrial, you do need industries want to run 24/7. So there is always the question of how do you make sure that you alternate the base load in terms of that. I think for us, when we're dealing with especially rooftop SHS and electric mobility, it's not a huge problem for our investees right now, and also C&I solar that is complementing grid solar, because the reason that they are complementing grid solar is, for instance, in Nigeria, we had a discussion in the morning, and the grid, I think, is producing or is running through about 5 gigawatts of power, but actually diesel generators are contributing to about 25 gigawatts of power, and that's huge, and you need to displace those diesel generators. Yes, the hotels, the industries are connected to the grid, but they need commercial and industrial solar in order to displace the diesel generators. And then when it comes to end of life, I think to us, that's the next big issue to solve for Africa, but also for the world. But the good thing is that technologies are coming up for end of life and e-waste recycling and solar recycling. I think I read an article that by 2050, we will have about 70 million tons of solar PV waste that we need to figure out how to recycle. But companies and countries are coming up with regulations. So South Africa made it illegal to dump solar PV in landfills in 2021. The same thing for Kenya, where we've developed e-waste regulations in 2022, 2023. What that means is that companies have been thinking about what to do about end of life, and that's the next spectrum of investments that we're looking at making. So one of our pillars for a fund that we're launching, a $70 million fund, also includes the circular economy and waste management, because our companies will also need that. So we're looking for innovations on that front.
Thank you. Before I pivot on to looking at risk mitigation, what we heard from Fabio is clearly something that I think this whole idea that there is actually a discount, that there's a green discount. I mean, Africa, it's well known, has basically got one of the highest solar irradiance qualities in the world. And with photovoltaics having fallen, there's a lot of, there is no reason why that shouldn't be a big portion of what the basket of energy solutions looks like. But there's always this question of, is coal cheaper or other fossil fuels cheaper? And I think what we've heard here is that that is not the case. And I would say even on the solar home system where Sun King operate, and there are, and despite what it is, even with the battery storage solutions, it is, what we're seeing is still substantially, very big discount as well as affordable access. And so for low-income consumers, what they're able to do is buy a solar home system, and because there's an embedded credit product in that system, they, our customers can buy and then pay as they go over time, in line with when sort of discrete and erratic cash flows work through. And so what we're seeing is a situation where customers are getting it affordably at a price which is substantially lower than what they're paying for the alternatives, which generally tend to be have health and environmental consequences. So it's going, and we're able to roll those out at scale, with notwithstanding the issues. That said, I think there are a number of risks going. I think for some of the companies like Solar King who are distributing to solar home systems, there are risks in making sure that they reduce the cash conversion cycle so that they can scale even quicker. And so on that basis, I want to very quickly, and blended finance has a role to play, and then there's also how we crowd in capital into solar generally. So I'm going to come to you, Piyush, and then I'm going to come back to you, Eugene, by the way, but Piyush, just to talk through what is available, how do we crowd in private capital into the sector, given all the positives that we've heard so far?
Sure. So this discussion is about the solar investment opportunity, and our experience of having mobilized $2.5 billion of capital into the sector is that solar has proven itself to be relevant in multiple energy contexts. So there is energy access, primary energy access, where we are basically electrifying people who previously didn't have access to modern energy. Then there is energy reliability. So South Africa, where there is grid, but there is a deficit. You have outages even in Cape Town and Johannesburg. You still have scheduled grid outages. So households and businesses need that reliable energy access to keep running their businesses. And then the third level is energy savings. You don't really have a problem with your grid, but then solar is still cheaper. So there are businesses who are switching to solar because it gives them control over their resources and for cheaper. And India is one example. But the reality is that these contexts, these energy contexts exist in multiple countries. So, or all contexts exist in each country for that matter. And all these energy contexts and solutions targeting these energy contexts are actually completely investable. Let me just explain with examples. So when we talk about primary energy access, one good example is that in Nigeria, World Bank has recognized that, okay, well, we need to take responsibility for electrifying these 400 million people who still do not have access to energy. So they're running a $750 million grant results-based financing program to fund development of mini grids. Now that's sub-commercial capital, but that's where blended finance comes in. I think there's a recognition in the sector that some types of investments are sub-commercial. So for right type of financiers are stepping in to provide that type of capital. Now that particular program is structured as a results-based financing program. So as a developer, you get your money only when you have actually built the grid and completed the connections that you promised, which means that there is a working capital gap from the time you order your equipment, build the sites, and then ultimately collect your results-based grants. And that gap can very elegantly be filled by commercial capital. So you actually see commercial capital and concessional capital coexisting and co-engaging, not in traditional stacks like we've always thought of in blended finance, but in stages. And that works beautifully well. We see that happening through our platform. Similarly, we talk about energy. I mean, CNI, commercial industrial rooftops are like bringing energy reliability. In South Africa, it's a ever expanding market, commercial industrial, and there's a lot of commercial capital from local banks now getting channeled into this sector. And similarly, in India, where we see energy savings, again, there are specialist lenders coming into the market who actually are providing pipeline to developers and saying that, hey, can you basically save money for our clients, and we lend to them. So you see how I think we've come a long way over the years. This conversation was a few years about, well, is solar cheaper? Is solar even financeable? Today, what we're seeing is that in all energy contexts, solar has proven itself to be a viable investment opportunity.
Thank you very much, Piyush. Just going to add an additional question there. Over the last 18 months to 2 years, we've actually seen a substantial devaluation across our markets. And so in the context of the underlying infrastructure being imported and the customer, whether it's a direct customer or in the case of county capital, even their customers have got customers that are earning local currency. How are we mitigating the risks?
Yes, so thanks for that good question, because it's a problem across the continent. Now, there are different ways in which these problems have been solved. So going back to the same World Bank program that I was talking about, previously, that program was disbursing its grants in Naira, in the local currency. But 18 months ago, when the problems started, World Bank decided that, okay, well, we have to, again, take responsibility for mitigating this risk, and therefore, we'll start disbursing our grants in US dollars. Now, what that does is achieve a natural hedge from what payments have to be made to the original equipment manufacturers to procure equipment and the money that the developers get at the end of the cycle. So the commercial lenders stepping in between and providing that working capital bridge are actually all dollar-based. They're providing dollar financing. So that's one example of how this problem has been solved. South Africa has a different problem. There is and India similarly has a different problem. There is a local currency, but it's like not volatile. There is a steady depreciation of the currency. So what you do is you become a smart financier. You price that in. And even the developers price their PPAs in a way in which they're factoring in that currency depreciation. So again, horses for courses, but it's still working. The money is moving.
Thank you very much, Piyush. Kevin, I'm going to come over to you because we're going to talk about the integrated solutions. But very quickly, as we're talking about risk mitigation, can I quickly come to you, Eugene? Because what we've also seen is, as a result of the devaluation, we've seen pressure on the consumer. Cost of living crisis as a result, and so the question then becomes, and yet what we, Citi, I should say, you were part of a very large local currency financing in Kenya, for example, yeah. which was underwritten with receivables yeah. from individuals. Can you tell us how you came about that product and how that came about?
Yeah, sure. Thanks, Kareem. So, and what Kareem is referring to, it's a $130 million Kenya shilling equivalent securitization that Citi led for Sun King. But before actually telling you about that, maybe I could tell you about the journey of how we got there, and that I think will just elucidate the value that catalytic capital and blended capital has. The first loan that we did, or financing that we did to solar home systems, was in a heavily blended instrument, something called Scaling Enterprise, which is a partnership we have with the DFC and the Ford Foundation. And that was a fairly simple line of credit, relatively small, to a solar home systems company for pay-as-you-go. And that gave us an experience, our first experience with financing solar home systems pay-as-you-go, and that was a positive credit experience for the bank. That enabled us to then lead a larger loan, a $75 term loan. So it was a larger loan, slightly more complex, longer exposure to Sun King. And then that then enabled us to do the securitization, where there weren't any guarantees for Citi, which is an instrument that we tend to like, but this was securitization that Citi led with 2 other local banks and 4 DFIs and multilaterals. And that's a structure where we were able to securitize the pay-as-you-go receivables. So Sun King sells the solar home systems. They generate a pay-as-you-go receivable. They've been doing this for a number of years. They have high-quality data that enables us to assess what the expected credit losses could be. So we were able to model that, and using the Kenyan infrastructure on the legal side, perfect the true sale and the security of that, and then be able to securitize that. I've just come back from Nairobi, and we're now trying to introduce that instrument really to the local capital markets. We want to truly localize that instrument, and so far has been received relatively well.
Thank you very much. And now, Kevin, I'm coming back to you. And the reason I wanted to come to you at this juncture was because when I think about Janus in particular, you're integrated energy solutions. You're across the renewable platform, and then you're also involved in the transition, which is the role that fossil fuels might still play in that. Could you just, given the opportunity for solar, could you just run us through solar, given what our colleagues have just discussed,
sure.
And how you see the transition?
Absolutely. No, thanks. I mean, it's fascinating, obviously, listening to all our colleagues on the panel. First of all, as I mentioned earlier on, we are from the continent. We grew up on the continent. That's where we made our money. Our capital is from the continent, and we're deploying much of our money back on the continent. Now, the fact that we are from the continent, our capital is from the continent, we've got a very pragmatic way of looking at things. We are in petroleum. We are in oil and gas to power, heavy fuel oil to power, diesel to power, solar to power, and we're even looking at hydro and geothermal, right? Now, we're very pragmatic in the sense that when we talk about Africa, I mean, the last time I was at AFSIC, we used to talk about 600 million people. Now we're talking about 700. And I promise you next year it's going to be 750, right? So when we look at this, we cannot have a China solution for Africa. We cannot have an India solution for Africa. And we cannot have a European solution for Africa. Because the reality is the market is divided into 54 countries with different regulations, whether we like it or not, right? In Kenya, our money is from Kenya. Our founder is Kenyan, right? Kenya, renewable is not a problem. Geothermal, not a problem. So there's no transition to be done in Kenya because they tick the box, right? Zambia, renewable, hydro, tick the box. The exception is, this year, massive drought in Zambia, right? When I say massive droughts, for maybe some of our colleagues who are from South Africa, South Africans thought that 8 hours load shedding was a nightmare. In Zambia, currently, it's 22 hours of load shedding. At best, with all good intention, in the next couple of months, they'll move from 22 hours to 20 or 19 hours of load shedding. That's the reality of our different markets. So we obviously believe in solar, but we don't believe that solar is the mecca solution for Africa. We need to look at which country we are in, and how do you blend solar with others, for example. As we know, let me take an example. I think you mentioned the history of this continent has been basically driven by where the resources have been, the rail lines, etc., which is still today, right? So when you look at that, in our part of the world, DRC and Zambia, we very well know, are extremely important for both the US and also China. We're seeing a lot of activities there, right? But then the issue is, how do you go and invest in mini grids if you don't invest in industrialization, for example? This is what China did over the last 40 years. They can actually talk about transition because they started in darkness. They use coal and whatnot to produce electricity. They industrialize, and now they're transiting very quickly, right? Now, on the continent in DRC or in Zambia, the number of people connected to the grid is, in DRC, it's less than 10%. In Zambia, the official statistics is 19%. So you're not going to transit from darkness to solar to renewable overnight. So that's why what we believe is when we look at the African solution for the multiple countries, is what is what we call not just transition, what is the just solution for Africa? The just solution should be looked at country by country specific. So we know, for example, certain countries, we should invest in solar. This is what we are doing as a group. To give you a couple of examples that we're currently working on, in DRC, a lot of the mining companies, which are also now going up the value chain because including DRC now, they regulating and forcing mining companies to basically beneficiate in country. You create value in country. So what we're doing is we're coming with a blend of solar, and we know that for the next 40, 50 years, we will continue to supply petroleum or diesel because you need to have both to work together. You cannot have a mining company just working from 8 o'clock in the morning until sunset, basically. We don't have the battery storage technology today to basically work from 6 o'clock at night to 6 o'clock in the morning. So you need a hybrid solution. So we're seeing that in DRC. In Mozambique, the same story. We're working with solar, but Mozambique has got gas. And we know it's a matter of time, the next couple of years. Gas is much better than coal, for example, right? Coal is much better than diesel, for example, right? So I think if we look at that, our view is, how do you bring in solar as an addition? It's like this morning, coming from my hotel to here, I had an option. Do I walk? Do I take a bike? Do I take the tube? Or do I Uber? Or do I buy a car to drive? You know, et cetera. And even Uber, UberX, et cetera. So that's why we believe in terms of the energy solution is solar can play a role, but solar will not be the only way for energy provision on the continent.
Thank you, Kevin. And when you think about the future, when you, in terms of the solar can play a role, but there are, you mentioned Kenya, where almost 80% of it is renewable. It's geothermal and hydro represent basically 80% of the energy. But across Africa, there are the renewables, whether they're geothermal, hydro, and so when you think about the work to be done, and going forward, how much renewable to fossil fuels? So I just want to understand whether even under the Janus, we're still looking at a path that is just reducing the fossil fuel proportion of that, given the fact that Africa's geography does lend itself to other renewable options.
Obviously there's depending where you come from, you've got the 2030 agenda, there's the 2040 and 2050, right? When I'm on the ground on the continent in DRC or Zambia or elsewhere, we've got the fastest growing youth population on the continent, right? And if we're not able to industrialize, which is the reality, we haven't been able to industrialize, we cannot create jobs, right? So this is the catch-22, is it doesn't resonate to my African brother or sister on the ground when I say, we're talking about transition, and he or she telling me, you know what, I don't have a job, and I can't even charge my phone. Potentially, maybe I'll charge my phone Friday because I only have a 1 hour window of power, right? So we have to be realistic about this, right? So what does it mean, okay? I think our view is we see fossil fuel and renewable, including solar, will have a long marriage. They're not ready to go for a divorce in my lifetime. So the 2050, what we believe, what we see when it comes to fossil fuel with the marriage of solar, obviously if the technology of solar improves and the battery is being sold at $1 or 1 cent, then obviously it makes a different perspective, right? Okay. But we're not seeing that anytime soon. Hopefully it's going to come. So we believe it's going to be more than 2050, 2075, basically, that fossil fuel in one way or the other will have to play a role with. Now, as you know, last week, because a lot of banks and DFIs are shying away from funding fossil fuel power plants. Last week, we've heard AFRICZIM setting up a bank. They're looking at capitalizing the bank at $5 billion. They've achieved, I think, the fundraising of $4 billion. Right? We're seeing other initiatives being put in place as well right now. What I'm trying to say is, I'm not saying that no for solar and yes for fossil. I think our view is we are on the ground, we see the difficulties. We cannot see a solution on just one asset class. We see a solution of a mix, of a hybrid, basically.
I mean, maybe just to provide a counterpoint there, I mean, in a place like Kenya where 80% is geothermal generation, there's still a transmission issue. And so regardless of what you are generating from, the population density across the continent is such where grid centralized solutions are just not going to be economical for decades, if perhaps ever. So what we're seeing is there is going to be a persistent need for off-grid solutions. And those off-grid solutions then need to be powered in some other way. And we're seeing solar as the best way to do that. I'm sort of seeing less so on the generation side, but that last mile, solar seems to be the answer.
Thank you very much, Eugene. And if I saw you sort of vigorously nodding there, Wairimu, so I want to just bring you in, just to sort of kind of give whether a counterpoint or an agreement with what Kevin just said.
No, and I agree in terms of having a diversified energy mix in terms of achieving industrialization and achieving development especially. But as Eugene said, in my master's class, my thesis was on the Eastern Africa power pool. And I got depressed because I looked at the World Bank map on grid connectivity, and both the transmission and distribution, even in Kenya in 2018, I think it's much improved now, was literally just an artery from Mombasa to Kisumu with outlets going up and down. It really looked like a capillary system across a main artery. And that's, I think, what convinced me to join the off-grid energy market, because even in the DRC, when I was studying DRC, huge hydro potential. The hydro potential in the DRC could actually power the whole of the Eastern Africa power pool, according to studies. But I believe it's still the case that they don't have a national grid as we know it. So will the population in the DRC wait for the grid to come to them? Or do we give them off-grid solutions? Do we give them rooftop? Do we give them mini grids that they are going to be the workforce that actually goes and crowds around the grids when they come? And that's where I see the largest potential in solar. And then even in urban, the cost is, I think we were discussing on average, standard minimum, 40% reduction in cost as between grid power and a commercial and industrial solar solution. The same when it comes to electric mobility. The driving force behind the uptake of e-bikes and e3-wheelers in Africa is because someone is looking at the cost of petrol for their bike and the cost of a battery swap for their e-bike. And in some places, it's actually a 50% reduction in cost. And when you're talking to an e-bike rider, in Africa, someone's not really thinking about saving the planet. They're thinking about feeding their family. And they're thinking about whether they can afford to take their kids to school on their e-bike. So they'll think about the cost reductions. And that's actually the economic aspect of adoption of solar and clean energy is what's been having the population switch to clean energy.
Just to add there, which we're doing as well from our perspective as well, not with the retail market, with the private sector basically, with captive. Because as you mentioned, DRC, for example, right? Mining companies and other companies are approaching us basically where we're setting up solar plants with hybridization, with obviously they've got the backup, which is the diesel and HFO, et cetera. This is what we're seeing as a new trend, and this is where we're spending our energy. Now, the difficulty that we face, obviously, as commercial, because we could invest anywhere in the world, right? And I also think we need to appreciate the reality of funding as well for that segment, right? The thing is, if you invest in solar in Europe, for example, your IRR is 20%, basically. It's in hard currency. You're not having to think whether you've got convertibility issues or liquidity issues, et cetera, right? The reality in our markets, even when you do dollar financing, et cetera, you do have the risk. The risk is there. The mining company, will they be able to sell tomorrow? Is there going to be a regulation? Will they be able to pay you in dollars or euros or whatever, et cetera, et cetera? So when we look at the funding issue is, on our continent still, it's difficult to have really long-term funding. In Europe, for example, mates of mine who work for Total Renewable, 25+ year of funding is a no-brainer. In our continent, 7+ years you're begging, 10 years you're really on your knees, basically.
But we have seen some changes.
I'm not saying you don't, but I'm saying the easiness of capital is not. There's not a flood of capital for long term. Then you overlay the cost of capital in terms of your interest cost, etc. So we've looked at many projects on standalone basis in Africa on solar only. You stack up with 12, 13% IRR on paper, okay, right? So that's where we need to be conscious. I mean, we've taken a decision. We could have invested in Europe at 20% and sleep at night, not having to work.
20% in renewables in Europe.
Yes, you can get. I promise you, my friend.
It's 15 years that I work in renewables in Europe.
I can show you.
We won't have any arguments.
Moldavia,
you will be surprised in Central Europe, AAA rated corporates, right, etc. Oh. But I'm saying, the reality is, we know we've looked at projects, we've invested. From paper profit to cash, there is a disconnect, right? I mean, we have assets on the ground. What we expected from 15% IRR is way into single digit. And very often, the fact that you don't get payment, you even at that point in time in negative territory from an IRR perspective. I'm talking here not selling to off-grid.
We're short of time. I just want Fabio to come in very quickly with you're on the industrial side. It sounds like there is a variance across the continent. Just a quick, I'd like to kind of
in terms of,
in terms of the IRR on the industrial side for solar.
Sure. Look, I mean, at the end of the day, we're primarily active in South Africa, right? When it comes to our business, commercial and industrial, depends obviously a little bit on the project and the customer need. In South Africa particularly, it's often not only a commercial discussion, but also an emotional discussion, because businesses need to secure basically the power, because the grid is not always there. But you would be looking at, around project returns on leverage of between 18 and 20% on a rand, which on dollar is low teens, let's say. And that's honestly like, from our point of view, a very good return.
Which is one of the powerhouses.
Thank you. And we're going to leave it there on that front. Wairumi made a point earlier on about that green discount on the retail side, and I certainly think it's something, as well as the Congo example she gave, it's something that we're also seeing in Nigeria, where before it was just about solar home system access for consumers who've never had access to electricity before. And now what we're seeing is customers who even have diesel generators are finding that now that the subsidies have been removed, the cost of solar, so we're actually seeing the sort of higher end solar home systems and the also sort of come into the market. So that is something that's working, affordable access, that's still delivering sustainable, profitable, and scalable model for the businesses that are divided that. So as you can hear, there is a lot, on the commercial side, on the retail side, there are some major issues there, but it does seem like solar will continue to be a substantial part of a basket of energy options, as we've been speaking about universal access. I'm just looking around now to see if there's one or two questions. We've got a couple of minutes left, so it will literally be over to you. Actually, the two gentlemen there, I think that's probably all we have time for today.
Just one. I can also just project.
Yeah.
Thank you guys very much. I run a business that's in the rock aggregate space in West Africa. Diesel is our biggest cost. We're off-grid. I was wondering, Kevin was saying earlier about the hybrid solution with nighttime diesel power is going to be here to stay for another couple of decades. I'm wondering if we could learn a little bit more about that from the panelists. And my second question is, that's the fixed equipment on a mining site that's processing ore. The movable equipment, we've looked out in the market, it's sort of first generation electrified trucking, which is the major consumption of diesel. Where you see that, when that might become a viable solution, because we've started to see a little bit of that in China, where we also have business, but just curious for people's views on that. Thank you. Okay, and could you give this gentleman behind you, so we'll take both questions and then.
Great, thanks, Karima. Let's do it in 2 in 1. Michael Mills from UK Government's International Climate Funds. This isn't a question, but it may provoke a response. It's an observation. This has been an interesting panel. It's been different from any other that I've been through this last couple of days because of a sort of wide range of views, and they're not all coalescing. When you look at the energy solution, there isn't an energy solution, and there's room for a wide range of views. But there is one important slice that we don't have here, and that is the impact on climate and the ultimate climate goals, which are reflected in 2050 net zero targets, which are a result of achieving 1.5 degrees warming maximum. It used to be 2 degrees, and ultimately 1.5 target, but we've shifted to 1.5. And to get there, you go through your NDCs, nationally developed contributions. So when you are talking about your range of solutions, if you don't have in mind 1.5 degrees maximum warming, and if you don't have in mind your NDCs, you won't get there. So with that observation, it's a sub-observation that you don't want to go to the person on the ground in sub-Saharan Africa, in Southeast Asia or Latin America and say, you have to meet the climate goals. You say, we cannot impede your development, but you have to get there under the framework of the climate goals. So make those work. That's my day job. That's what I do every day. But we haven't heard that once this afternoon.
You want to start with that, and then Kevin and Fabio.
I'll be very short.
I think they're actually both connected. So to the first question, I think my view is different from Kevin. So I think that we're already seeing a transition of corporates from diesel to solar because it makes business sense. They're saving money. On the solar home system side, where you're providing energy access, you're displacing an alternative source that is at least as expensive, and you're getting a better product that provides more light. So the answer to both is the customers aren't buying solar home systems because they care about the climate, and businesses aren't transitioning from diesel to solar because of climate, is because it just makes financial business sense to them. Now the funding that's going from DFIs, multilaterals, now that may be driven because of climate, and that's important to enable these projects to happen.
Yeah, and maybe just I can quickly deal with the tracking question. So we are seeing a move to electric tracking. It's in its early stages. We Persistent invested in a company called Lorry that's based in Kenya and Nigeria. And the reason why we were attracted to them was because they were actually looking at increasing the backhaul of trucking across countries so that there's more energy efficiency, because trucks come from Mombasa full, they go to Uganda, to Rwanda, they come back empty. So there's wasted energy and more carbon emissions, but what they're doing is increasing the backhaul. What they're also piloting, they're going to be piloting from next year, is that electric e-mobility, e-trucking, and that's one of the things that we're looking at strategically in terms of seeing what else we can invest in. And then to your comment, I think for us it's a given that we are contributing in our investments, I think across the board, to net zero. I think what I can say to that is that it also takes a global village, because, you know, we need 300 billion a year in Africa to meet our nationally determined contributions. We are only getting 30 billion a year so far. That's 10x less. in terms of capital to climate impact and climate action. And when I say it takes a global village, it's not just in financing Africa, but also in, I guess, also the West, also leading by example in terms of pulling more capital to the African continent.
I was going to say I speak with all the big investors in the sector, all the way from World Bank to DFIs to global commercial banks. And on your comment about climate responsibility, I'm just reminded that whilst the cost and efficiency of coal isn't changing, the cost and efficiency of solar is reducing all the time. So the calculations of what is the optimal mix for a country or a certain sort of energy context is also changing every single year. So I'd like to think that Kevin will also be changing his view in a year or 2 or 3 down the road as those calculations change. So
I think I call it misunderstanding. That's what I'm saying. I had an option to walk, bike, or take the car. It's an option. But if you only say you only got the Beamer, right, that I think is the wrong thing to say. You need to live with the option. Now, going back to what you've said in terms of diesel and cost, etc., bottom line what it is. If you're burning diesel, you're charging the mining companies, let's say private sector, probably at best 25 cents. At worst, let's say on the other side, 35 cents, right? On solar, depending on, obviously, how long the PPA is, the credit rating of the mining company, and access to debt funding, long-term debt funding. If you align all the stars for solar, for example, you can basically be around, there's a magical number, which people talk these days, is 7 cents. We've looked at that. We don't believe in the 7 cents. We think it's double digit, maybe 10-ish, basically, right? Now, obviously, if on one hand you have to choose between 28 cents and 10 cents, you're not thinking about the net zero agenda. You just jump on it because it makes financial sense, right? But the reality is we're not there yet, right? There's a lot of constraints, right? Africa doesn't produce the panels. We have to import the panels. It's a cost, right? On the other hand, Africa has got gas today. We can do clean gas to power. We are working on projects, for example, in Mozambique and elsewhere. So that's why when we look at that, we say, okay, solar, we do believe in solar. We have a solar plant in Uganda. We're looking at solar in DRC, in other countries. But we're saying, let's be realistic and offer a solution that works. If not, in 2050, it's not going to be 700 million people. I can tell you it will be 2 billion people with no electricity, right? Now, to the other gentleman behind in terms of climate, totally agree, endorse. We're also doing a lot as a group. You've mentioned, I think, transport, for example, electrifications. We've got a hospitality cluster, and we've got electric 4x4s, for example, right? In the Serengeti in Tanzania, we're seeing this more and more coming, etc. But at the same time as well is, how do we access funding? And I think you've summarized it very well. 10x. We're very far from that 10x. 10x will give us to our break even in terms of 300 billion. And that's what we need to lobby, each one of us, is that basically our friends from this part of the world cannot just say transition, or 2050 net zero. Give us the money, we'll make it happen. And it's not give us the money for the sake of giving us the money, because we also have a growing youth. If we're not able to create jobs for this youth, it's going to be a problem for the politicians in country. We've seen lately in Kenya what's been happening. And it's going to be a problem in this part of the world as people continue to cross the Mediterranean. So we need to look at it holistically.
What I would also add to that is the fact that when we think about global emissions generally, if we, in the context of Africa population doubling from 1.25 to 2.5 billion in 2050, every African is going to represent 1 in 4 people across the globe. And if the access to renewables or low carbon is not possible because of underinvestment, then what will happen as income goes up is that it will end up just being the continuous. So actually the biggest route to solving for both energy access, i.e. energy poverty, and climate is actually bridging that funding gap to accelerate access to renewable energy, which we're seeing already. And so I know that we are, I'm looking at you.
Should we give Fabio his final
Fabio, go ahead.
Yeah. great, because it's a very polarizing comment, so it's best to do it at the end. I'll pick up on what you said, the climate crisis, right? You made the example of the mine, obviously having to work 24 hours during the day with the sun, at night with diesel. In fact, we also offer hybrid solutions with diesel, but because if we can save 1 ton of CO2 by adding 200 kg, we have a net saving. But if the climate crisis or the carbon emissions would have a price, would the mine still operate at night? I don't think so.
Good. Well said. So I think
I
the
don't,
big thing is we need to
I'm
get
not
to
sure
the
others
carbon
of mine.
price. Thank you.